This is a very important week for crypto with key macro events, and will FTX be selling $3.4 billion worth of assets into the market, of which most being Solana? We can expect major volatility this week, so we better be prepared. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop the latest content. Follow us on Twitter, altcoinbuzz.io, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. Bitcoin begins a key macro week in a weak place as 2023 Bitcoin action begins to look like a double top. After a disappointing weekly close below $26,000, Bitcoin is struggling to catch a bid amid a return to low volatility. Bitcoin closing out the week below key trend lines was already expected, but the reality may be worse than many care to admit. That is the conclusion of trader and analyst Rec Capital, who warned that a close below $26,000 would likely validate a double top structure on the Bitcoin weekly chart. This currently takes the form of Bitcoin's two 2023 local tops, both above $31,000, with a retracement to $26,000 in between. Bitcoin slowly heading lower has refueled a debate over its ability to repeat classic chart behavior. This focuses on Bitcoin's habit of filling gaps on CME future markets, which appear on weekends and holidays. Here, the difference in price between one week's close and the next week's open often forms a magnet for Bitcoin price action in the future, but not always immediately. Bitcoin often fills gaps within days or even hours of future markets resuming, but over time, some have been left behind. A major gap on the radar currently lurks at $20,000. After a quiet start to September, the macroeconomic landscape is returning as a potential source of risk asset volatility. This week, the United States Consumer Price Index, or CPI's August print, forms the focus ahead of a key interest rate decision by the Federal Reserve. The Kobayashi letter wrote saying, "Huge last week before the September Fed meeting, noting that lots of volatility lies ahead." Due on Wednesday is CPI, a well-known volatility catalyst for Bitcoin price action, but recent prints have failed to alter the status quo for long. Crypto market participants nonetheless include its release in their roadmaps, while the figures are apt to impact market expectations of what the Fed will do with its benchmark interest rates. Its next decision will come on September 20th, and according to CME Group's FedWatch tool, confidence is high that rates will remain unchanged. As of today, the odds of a pause in hikes were at over 90%. Make sure to watch our TA video later today, where Randy will discuss the Bitcoin levels you need to watch for next, as well as Solana with the FTX fears and XRP now that the SEC has appealed the lawsuit. Are you looking to earn money on your coins, including coins that you can't stake like Bitcoin or Arbitrum? Then check out our sponsor for today's video, Cryptonomy. Besides earning interest on one of 38 cryptos or 6 stablecoins, you have some options on Cryptonomy, including earning through flexible or fixed rate savings, borrowing at competitive rates, and investing in projects through their launch pool. The launch pool is their secret sauce though. The average ROI of a project that lists on Cryptonomy is a 46x. Those are some serious returns, and as you can see, we are allocating some of our funds here. We're putting 0.5 Bitcoin into the launch pool, and this amount qualifies us for the bronze tier, where we can earn up to 5x on our investment under 50-50 profit share for the next 12 months. We're also putting 0.2 Bitcoin into the flexible staking. This deposit will earn 24.72% as you can see here. This is also a 50-50 profit split. You can increase your share of the split as your deposit grows. Tracking transactions is easy on the platform as well. Everything Cryptonomy offers is with the idea of growing the launch pool side of the business, and you can take part and get your share of it. If you like what you see and you want to try out Cryptonomy, just click the link in the description below. The United States Securities and Exchange Commission argued on Friday that whether or not Ripple violated securities laws in making XRP available to retail investors by putting it on crypto exchanges is absolutely a question that needs appeals court intervention. The SEC filed a response to Ripple's memo, which argued the opposite as part of its ongoing case against the crypto company closely affiliated with the XRP cryptocurrency. While Ripple argued last week that the SEC hadn't made a sufficient argument to warrant an appeal, Friday's filing pushed back forcefully. The SEC signaled its intent to appeal Judge Annalisa Torres' ruling in the U.S. District Court last month, asking the judge for permission soon after. The judge allowed the SEC to make its case, giving Ripple a September 1st deadline to present its opposition. Friday's filing is a response to Ripple's opposition memo. Judge Torres ruled in July that Ripple violated federal securities laws in how it sold XRP to institutional investors, but that it had not done so with retail investors. Another judge in the same court, Judge Jed Rakoff, disagreed with the judgment when he ruled on a different case. also brought by the SEC. The regulator then pointed to this in its first memo in Friday's filing. XRP is currently trading around the 47-cent mark, which is back at the level it started before the ruling back in July. Majority Whip of the U.S. House of Representatives Tom Emmer noted in a September 9th post on Twitter that the SEC chief Gary Gensler has misused his authority. Emmer accused Gensler of overstepping the agency's bounds in pursuing crypto enforcement and negatively impacting Americans. Emmer is a well-known crypto ally who has raised concern about the SEC's overreach several times. He recently said Gary Gensler has abused his authority to grow the administrative state to the detriment of the American people. Emmer urged Congress to use all available tools to restrict Gensler from further weaponizing taxpayer dollars. To help Congress do that, Emmer said he plans to sponsor an appropriations amendment limiting the SEC's funding for crypto enforcement actions. Emmer said that this bill will tie the SEC's hands until clear rules and regulations are in place. Ripple Chief Legal Officer Stuart Alderati chimed in by saying another SEC filing, another hypocritical pivot. After years of its chairman saying the rules are clear and must be obeyed, the SEC now cries that an appeal is urgently needed to resolve these knotty legal problems. Solana has plunged more than 6% in the last 24 hours amid fears that bankrupt crypto exchange FTX may soon liquidate a significant portion of the token and other Solana-affiliated crypto assets. According to a combination of data from SolScan, which has added up the value of 3 publicly available FTX cold storage wallets, the FTX estate holds a combined $1.5 billion in crypto assets on the Solana network. Of that weighty figure, Solana tokens account for just $128 million worth. The rest of the amount is comprised of numerous Solana-based altcoins, such as Wrap Bitcoin, Maps token, Serum, and a number of other tokens referred to as Sam coins. Still, the idea that liquidators may soon unleash $128 million worth of SOL and hundreds of millions worth of other SOL-affiliated tokens onto the market hasn't inspired much confidence in the market. A number of users took to Twitter to voice their concerns over the impending sell-off. One user wrote that FTX is about to dump $680 million worth of SOL, and another wrote that SOL is going to dump hard after FTX sells its bag, going to reach $14 soon. Others have stated, however, that the bankruptcy plan actually restricts how much can be sold off at once. According to FTX bankruptcy filings, the proposed plan for the liquidation of FTX's assets imposes a series of conditions on the sale of tokens. On August 24th, FTX proposed to appoint Mike Novogratz as Galaxy Digital Capital Management as the investment manager that would oversee the sale of its recovered crypto holdings. In this plan, the FTX estate would only be permitted to sell a maximum of $100 million worth of its tokens each week. However, that limit could be raised to $200 million on an individual token basis. These limits have been introduced in a bid to minimize the impact of token sales on the broader market while still allowing for FTX to make creditors whole. Notably, the plan has not yet been signed off by the courts. However, the plan and a number of other matters related to the FTX token sale are expected to come before the Delaware Bankruptcy Court on September 13th. Dr. Profit on Twitter gave his thoughts saying, "Big warning for all that believe that FTX is going to liquidate assets worth billions of dollars on September 13th. Don't fall for the trap. Even if approval for the sale of FTX assets is granted by the court on September 13th, execution won't transpire immediately on the date. Everyone that is sharing drama has absolutely no clue what they're talking about. There will be a structured framework to sell these tokens, such as $200 million a week as it was reported. Or do you think the SEC and CFTC will just watch as FTX is dumping once again on investors?" Next point is the selling marketplace. Where do you think FTX is going to liquidate its assets? I fully doubt that Binance will take care of it, as it's not legally allowed to liquidate those assets directly through government channels or secondary markets. However, an underwriter will take care of this matter and liquidate these assets with risk management, finding buyers that are most likely OTC, negotiate terms of the sale, including price, payment terms, and any conditions to avoid chaos in the markets. Underwriters ensure that the sale of assets complies with all applicable laws and regulations. This process takes months and there's nothing to fear about. Market makers love to plant the seed of fear in your mind. Lark Davis also wrote on Twitter saying that FTX has, according to the slide, $3 billion in crypto ready to dump on the market and send us to Goblin Town. But what's the truth? First, these coins will not be market sold. I bet most will be sold OTC. Those that aren't will be sold slowly via market makers, in my opinion. As for Solana, most of the tokens are locked, with the release of the coin happening over the next 4 years. When this is sold OTC, it'll be someone buying FTX's vesting contract. As for FTT, marked at $529 million here, but the current market cap is $350 million. The coin is basically worth zero though, because who the heck is buying this garbage? No one. As for Bitcoin and ETH, they have a good amount, but not billions. This is absorbable by pressure. And for Aptos, this is the only one to maybe worry about, but again, that would only be if they dumped all the coins in one go, which they won't. Remember that they want to extract the max value from these coins. As for everything else, there's no amounts big enough to be of concern. The FUD around this is worse than the actual event itself. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.